Hello, Wolfpack. We've got something very important to talk about today, and that is the fact that Bitcoin, Ethereum, the total cryptocurrency market cap, and the S&P 500 are charging straight towards a major resistance line that is stemming back from November last year in all occasions. We're going to look at that in a second. That's very important. There's a lot of analysis we need to do around that. And there's a lot of big decisions we need to make regarding that as well. But before we get into that, let's just get into the basic analysis. Now, Bitcoin, of course, is breaking to the upside. However, it is still in an ascending wedge formation. If we bring out the RSI, bring off the RSI here, you can see that very clearly. Ascending wedge formation here, pattern of exhaustion. If we brought up the volume on the Binance chart, we can see that that volume is actually decreasing over time. And so it means that this move, yes, it's moving upwards, but the strength is decreasing as it goes further and further upwards, which is typical of a bearish ascending wedge structure. It's not the best in the TA aspect here. I mean, I can't lie to you, right? Yeah, we're moving up. Yeah, we broke 23.8K. Yes, I hold a Bitcoin position right now. But if we do drop back below 23.8K and we close below it, I'm selling that position. I'm not going to hold that position in this structure. This is not a good structure, and no one can really tell you otherwise, especially in the short term. Now, in order for it to be a good structure, we would need to break some critical levels. Now, on the RSI, for example, we have broken the critical level as well. We've broken that already, I should say. We've broken that ascending triangle formation. Stochastic RSI is topped out as well, which is not good. So we've broken out a few things here. Another thing we've done is we've made this three-day RSI line on Bitcoin. We've broken that to the upside. We closed the 3-day candle above that RSI line on the 3 day as well, which is bullish. It generally means you break the actual resistance, which is above here on the screen. And so that's good as well. Like there's good signs, and if we go to, for example, something like the weekly chart on Bitcoin logarithmic scale, yeah, we're back above a 200-week SMA. We've got 24 hours until the weekly candle close. If we can close this weekly candle above 23.8K, that would be extraordinarily good for Bitcoin, right? That would be a really good step in the right direction, because 23.8K has not seen a weekly candle close above it, and that is the critical level at this point, 23.8K, right? At least for support for downside. We need to close that weekly candle above 23.8K. I'm telling you right now, if we come back down, close below it, I'm selling that position, because it's not worth holding a position when you lose that local support zone. But, there are good signs here. And if we're looking at the volume profile, this is where it gets a bit complicated. They're good signs, but they're not necessarily, extremely compelling, right? We're looking at the volume profile. We can see if we do manage to close that weekly candle above 23.8K, what we're doing is we're inserting ourselves in a position in which we're in the middle of this volume profile, meaning there's very literal local resistance between here and 28.6K, meaning it is likely we go to 28.6K, meaning it is likely we break the downtrending resistance line on Bitcoin. So this weekly candle is actually incredibly important for that reason. It is very necessary that Bitcoin closes above 23.8K, and the higher it closes above 23.8K, the more convincing and the more convinced I will be that we'll be seeing a retest of that 28K level, right? Now, in order for the bear market to be over, we know this already, I'm just going to say it again, the 28.6K level needs to be taken. That would be the end of the bear market, because there's a difference between being short-term optimistic and longer-term bullish, right? In order for me to be macro bullish again, we do need to take the macro level being 28.6K. That is the level that held us up. That was the lifeline we had during the bull market, and hence during the bear market, it's the level we need to take to get back above that lifeline, right? And getting above that would break above the bull market support band. It would flip this entire gap on the volume profile as well. It's very objectively important. I mean, I don't know many people who would sit here and say 28.6K is not a very, very important level. It literally is probably the most important level on the Bitcoin chart right now, right? So all eyes on 28.6K, but then let's get into the main juice of the video, right? This is really what I want to talk about. So obviously the market is charging upwards, right? And we know it's doing that because we can see it in the price action. We've seen inflation top out, or at least locally top out, but probably top out in general. We've seen the S&P 500 charge forward. And what we can see is that we're charging forward straight into a very strong resistance zone. Okay, and it's not strong because the amount of retests we've had of it. It's not, particularly strong in retest format. It's only had 2 retests, but it's strong because it shows up at the exact same place on every single major chart. Bitcoin, strong resistance line. Ethereum, strong resistance line. Total cryptocurrency market cap, 2 separate strong resistance lines charging straight towards it. S&P 500, strong resistance line, right? This is what I mean. So, just before you get super, super, super bullish, just realize we're getting very close to a connected resistance region throughout the 4 most important charts in the cryptocurrency market. right? This resistance region is connected on every chart. Every single chart you can look at, the major charts, they all have a very similar resistance line, and we're getting very close to that resistance line on all of those major charts, meaning it would not be irrational, it would not be surprising, I should say, if we head a little bit further upwards and then see a rejection. And whether that rejection is a short-term rejection, we form a higher low and then come up and break it, yeah, great. Or whether it's a rejection and we go down for a lower low, right? Who knows, right? But I would say it's most likely that we don't go back down to 17K. I would say it's most likely the bottom is in at this point, but I'm not going to position myself in a position in which I'm not going to position myself in a place in which that would line up with my logic on it, right? Because right now I'm acknowledging, hey, the bottom is most likely in. However, we are still in a macro bear market, and for that reason, we do need to act as though the bottom is not most likely in, right? Because I am a confirmation trader. I'm a breakout trader. I trade when it's confirmed. I don't care what I think. I don't care what my logic is telling me. I care what I see as the objective facts of the situation, because I can understand that there's a difference between my personal bias and the mathematical probability of something playing out. I've studied technical analysis for years. I've had a trading course of my own. I know pretty much every single market pattern to the actual percentage of likelihood that's going to play out to the upside of a downside, and I can remove myself from the situation. I can say, okay, I personally think the bottom is in. However, I'm not going to position myself in a way that lines up with that thought process until there's absolute confirmation from the charts that the bottom is in. Because I can realize that I can be incorrect. The charts can't be incorrect. The charts are speaking the objective truth of the situation at 100% of the time. And so yes, I say, okay, the bottom at 17K is most likely in, but I'm not going to act like it is until I'm 100% certain that it is. Because right now, I'm not 100% certain that it is. So 4 major charts, Ethereum, Bitcoin, total cryptocurrency market cap, and the S&P 500 all have a resistance zone lining up. We're heading towards it right now. Don't be surprised if we see some turbulence. We've got a little bit further to go. We might go up a little bit more, but don't be surprised if we see some rejections off that region, and be prepared to react to that, right? I want to say as well, just finally clarifying, the weekly candle close has to close above 23.8K. If it doesn't, bang, we're going back down. Then my whole perception of the bottom changes as well if that happens to a certain extent, especially if we lose to 200. And then also, one more thing we need to talk about as well, speaking of how critical the next weeks are, is the monthly chart RSI. What we can see is the monthly chart RSI has basically had a very important level at around, 45 to 44 historically. That level marked the bottom in the 2015 bear market and the 2018 bear market. We dropped below it a little bit this time, but we're coming back up and retesting it from a downside. So it's a very important level. So it pretty much seems like everything that's important on the macro time frame is lining up to be challenged in the month of August and maybe early September. So the next 3 weeks, that's really going to be a defining moment for the cryptocurrency market. I think the next 3 weeks are basically going to tell us where Bitcoin's going to go. Macro, certainly, right? There's going to be no more speculation, especially deep into September. We really should know where the macro direction is at this point. Right now, it's a little bit uncertain. I can tell you my opinion. I can tell you also that my opinion is not backed up by the facts yet, and so I'm not really caring what my opinion is. I care what the facts are. I think the facts will display a clear picture of what's going to happen with Bitcoin on the macro scale by mid-September. So within the next month, 3-4 weeks, I think it will certainly show us that very, very clearly. So thanks for watching, guys. Now, I do want to talk about Limitless. So this is my second channel. I've got a video you can see it's premiering tomorrow at around the time this video comes out. So 24 hours by the time this video comes out. This video, Communism and Necessity for Inequality, is coming out. A 30-minute video essay. If you're interested in that kind of thing, please go ahead and check that out. Turn on notifications for that one so you can get alerted when it comes on. And then we've got Wolves Crypto VIP. So if you go to my Wolves of Crypto YouTube channel, click the join button. You can see all the perks you can gain access to if you sign up to the VIP membership for 40 AUD a month, which is 28 USD a month. 4 altcoin trading setups per week, a prioritized reply to comments, a 2-hour lecture on market psychology, and exclusive Telegram group access where you can discuss charts and stuff with VIP members. Then we've also got the BitGet Exchange. My favorite exchange. I reached out I reached out to these guys for a partnership. They did not reach out to me because I realized that, hey, this exchange is actually a lot better than the major exchanges, especially Binance, which is what most people use, and Coinbase. Why? Well, it's got half the fees of Binance. It's only got a certain amount of coin pairs, right? You can see 60 or 70 coin pairs here. The reason for that is because unlike Binance, these coins are actually tested, right? Binance tests their coins, but they have rug pulls on there 24/7 basically. They also have strong liquidation wicks caused by the exchange on Binance that rug people out of the trade. This doesn't have anything like that. BitGet actually has systems in place to protect traders. These coins are all tested fundamentally, and so you don't have to worry when you're entering a trade about, oh, what's going to happen with the fundamentals, because 99.9% of the time, it's going to be fine because these coins have actually been ran through and had an extensive fundamental analysis check on them. So half the fees of Binance, extensive checks on coins, exchange regulations in places, but also you can decentralize it on your end because you don't have to KYC. So sign up to BitGet using my referral link in the description below and gain access to a reward center on top of that. In doing that as well, you're also helping out the channel because obviously a certain amount of your fees go directly towards the channel. So then we've got Crypto Academy, a company created by myself and Megawell Crypto. Become a trader, 10-unit course. If you want to become a trader, if you're interested in learning technical analysis objectively, no opinions in this. This is all objective mathematics. And so you're not going to get a biased course here. This is all objectively true. If you want to learn it through slides, videos, worksheets, trading diaries, this is the course for you. So from step 1, what is Bitcoin, to step 10, advanced risk management and how to find trades, which is the final step. In the middle, you're going to learn technical analysis, market patterns, candlestick patterns, indicators, etc., how to apply it into trades, how to use exchanges, etc. If you want to join 59 students here and become a 60th student, join us here and send us an email at Become a Trader. Send us an email at cryptoacademycourses@gmail.com, for all of the relevant payment information and a video explanation of what the course looks like and what it is. Thanks for watching. Hope you enjoyed. I've got a very unique video coming tomorrow, and I'll catch you then. Cheers.